What's up, you guys? It's Matt here. So in this video, I'm going to go over the RSI because I noticed there's a couple of videos out there that explain RSI, but they do it in a more technical way. And I feel like for anybody that's a new trader or a person that's just trying to understand indicators and when to use it and how to use it, it gets too complicated. So as I was going through this script, I was putting everything down, jotting everything down, going through my notes, and I noticed that I did the same thing, making it too complicated than it has to be. I understand that there's a lot of information that goes into RSI, but you need to dumb it down a little bit just so that everybody can understand. And then if they want to take that leap into understanding it a little bit more, understanding the calculation behind it, understanding just every single piece of information on how you would use it, then they would take that leap in order to understand it. So RSI as a whole, we need to understand how to use that from a very simple perspective. So we're going to get into this in a little bit. Before we get started, guys, hit that like button. Also hit the subscribe button for more videos like this one. I plan on doing a lot more education videos and hopefully simple breakdowns. So definitely hit that subscribe button. I noticed 60% of the people that watch my videos are not subscribed, so feel free to hit that subscribe button. Also, if you guys want some of my merchandise, profitsapparel.com, feel free to check out that down below. And if you want more information like this and something that's more tailored to you, go over to my Patreon. Feel free to sign up there, and you'll get buy alerts and all this other stuff as well. So let's go ahead and just start with the definition of RSI. Now, if you want all of the detail, go to Investopedia. RSI, they have a lot of information there. You might get overwhelmed with it, so that's why I would definitely say watch this video. I'm gonna make it in simple terms, or explain it in simple terms, hopefully. But the relative strength index. The relative strength index, or RSI, is a momentum indicator used in technical analysis that measures the magnitude of recent price change to elevate overbought or oversold conditions in the price of a stock or other asset. It can have a range of 0 to 100. Traditionally, interpretation and usage of the RSI are that values of 70 or above indicate that the security becomes overbought or overvalued and may be primed for a trend reversal or a correction pullback. And we will explain that, right, in the price. And the RSI reading 30 or below indicates an oversold or undervalued condition. So that's it in a nutshell. I understand that there's a lot more information that goes into it. You can go into the formula, really breaking down the formula and understanding it. If you actually break down the formula a little bit more, you start to get why, and you start to do the formula yourself. You can actually break things down a little bit easier and understand the different details of why you would use RSI. But it gets very, very complicated as you start to get into some of this information here, as you start to break down different ways of looking at RSI with RSI divergence, and just it's just a lot to deal with. These are different strategies that you can use when it comes to RSI. But what I want to do is explain in a nutshell of where or what you need to do with RSI, or what I usually do with RSI. Right? I don't simply use RSI by itself. So let's go into Webull, and we're going to look at AMC. You can see here that if you add RSI, if you wanted to add RSI, you would go up to indicators, up to this area. You would go to RSI, and you would just add RSI, just select it until it turns blue. Now, when you look at this, you're going to see conditions just like I just mentioned, right? It can go from 0 to 100, right? You can see it all the way down here at a low of 0, right? You can see it, how it's it could be oversold, or it could be overbought, right? You see here over here in the yellow, you're going to see 70 and 30. That's basically showing you overbought or oversold conditions. So typically when you go through a stock, whether you're looking at a certain period in time, typically I would use this in day trading. You can use it in swing trading. You can use it in long-term investing as well, just to see where the trend actually is. However, in day trading and swing trading, it can be a little bit more risky, and I will explain why. But basically, when you look at this RSI, right, let's go back to the time where AMC jumped up to $72. You can see that this is well oversold or well overbought up in this area. It's up in the like 90-ish area, 92, 95-ish area. However, you can see that even the same type of price movement, you can see the same type of price movement all the way back here when the price was way lower. Now, why is that? I mean, you're having that obviously has to deal with more of the calculation and the amount of growth that we've seen at one time, right? It's about momentum. So momentum is key when it comes to RSI. So again, if we're at the 70 mark, you can see how high that is and how people think, hey, you know what? This is going to see a massive pullback. It's getting so high on the RSI. The issue with just trading on the RSI is that you see how far above the 70 or overbought conditions it's been, right? It's at 70. People would think, oh, you know what? It's going to start to come back. Oh, wait, you know what? It's at 85. It's going to start to come back. Well, it did fall back a little bit. Okay, that's great. But did it fall back enough? No, the momentum is still there. So the momentum continues to rise and it gets all the way up to 95 on the RSI. Now, a lot of people, if they were swing trading it or day trading it, I understand people don't do that with AMC. If they were swing trading it or day trading it, they would have probably sold the position way back when because the RSI is way oversold at this point, right? When the price was at 24, 25, or even lower than that, right? You can see it at 20. And that's where people would make that move because typically, as you see things that are that overbought, you will see a pullback because people look at the RSI and go, okay, people are buying this way too much. We're going to see a pullback. And then they get out of the position. However, it continued to rise, right? And you see some consolidation. That consolidation actually brings the RSI down, back down to earth. And you see that actually fall there. Now, if you're using this in day trading or swing trading, typically what you're going to see is you're going to see things like this. Now, this is still the day chart what we're looking at. I'm not going to change the chart. Typically what you'll see is things like this. You're looking for that low point in order to invest in and see it rise to a higher point, right? You're looking for the lowest point that you could possibly get, which the RSI should tell you that. However, you can get into a situation like this where you're on a downtrend, you see that decrease, you see that it hit the RSI and it's like, all right, that's going to bounce. You see the confirmation, it jumps up, right? Well, technically, you're seeing, you're seeing that get up to another level. But what you need to notice is what indicators are telling me if it is indeed on a downtrend. Should I actually expect this to completely reverse as of right now, right? Because if I'm looking at this, you're looking at the RSI that's being oversold. It did show confirmation that it was going to increase here. But if I look at the indicators, I notice that it's been resisting close to the 15 moving average. So the 15 moving average is showing a very bearish trend. So what I'm going to say is that's probably a fake out basically. And now I'm looking for a lower low, even though when you see that, it looks like it created a W formation. However, it's a downward W. It's a descendant W to create more of a trend or a trend reversal here at that second low. So it can be difficult to time the market even with just RSI. So when you factor in RSI, you need to factor in other indicators as well. You can't just go off of RSI. There's no one indicator that will tell you exactly when it's at its low, because again, you see it at low RSI, it has a reversal, but ends up falling just again down to the same level on the RSI, but the price is much lower. So you getting out or getting in it at 25, you could lose $5, even though you saw it rise up to a level of $34. You could have gained something here, but who knows what you would do at that point. Maybe you gained something from 25 to 33. That would be great. However, if you held it and waited for this to move long term up to 45, you would lose money before you would end up making money. So there's not one indicator that will give you that price prediction of the lowest point possible. So that's what I had for you guys today. And hopefully I broke it down in simple terms so that you guys can understand how I would use it, and also not really to get confused with something that is being oversold, because if it is being oversold, doesn't mean that you need to buy it right now. You need to find the best place for you to buy it and build a better strategy so that you're not just using RSI, so that you're using other indicators, so that you're using, maybe a different support level or resistance level, right, as well. So there's a lot that goes into trading, day trading, swing trading, long-term investing. And I think RSI is definitely one of them that you should have on the chart so that you can understand when you need to buy, right? Because again, you don't want to solely use RSI, but it is a very important indicator for you guys to use. So hopefully that does explain something. I wanted to break it down in a very simple way so that you guys can understand it. So if you could hit the like button, let me know if you enjoy it. Let me know if you want something more complex. I understand that things can get overly complicated and people will explain it in a 40-minute video of what RSI actually is. And you don't really need that. A lot of people just need the simple terms. A lot of people that are looking for what is RSI on YouTube don't understand what RSI is from like the beginning stages of RSI. Like, just what is RSI, the definition? That's what I need to know. How do you use it? Not RSI divergence, which is important, or RSI strategies, or just jumping into very complex strategies in using RSI. You don't need that. They will baby step their way into it. I don't know why I'm teaching other YouTubers how to YouTube, whatever. Hit the like button, hit that subscribe button, hit that notification bell for more videos like this one. Also, make sure you guys check out some of the links down below. If you guys want to join the Patreon, feel free to do that. If you want my Profit Apparel, feel free to check that out as well. I think they're really clean looks, and it's something that you can get away and people won't think that you're wearing YouTube merch. It's just a simple phrase that's on the shirt. It's pretty nice. I like it. I have a couple of shirts that are in the wash right now, so I'm not wearing it. And I want to get the hoodie because the hoodie is just really clean. But I'm going to get out of here, and I will catch you guys in the next video.